What's going on, motherfuckers? Time for an update video. Absolutely loving the price action I'm seeing market-wide right now. S&P 500, holy fucking shit, just continuously ripping to the upside. AMC looks good, checking off landmarks of the flat portion. Altcoins, bullish as fuck. Everything looks great all around. We're in a complete bull market. And with that being said, let's just jump right into the video. And we're going to start with SPY today. So, back to the symmetry. And this is an old chart. This was from 2 weeks ago, 2.5 weeks ago approximately, when SPY was coming down to 409 here, mentioning that that was the symmetrical landmark to the downside we were looking for, this bottom right here at 409. We dipped a little bit through it. I mentioned that wasn't really a big deal. All of the landmarks on the right side have been a little bit lower than the left. But when I called that bottom at 405, I said expect an uptrend to 450 relatively short term. And today, we just hit 450. And, you know, I've been tracking the symmetry on SPY for a very long time. Pretty much since the beginning of the year. So, you know, January, February, March-ish, 2023, right here in the beginning of the year, tracking the symmetry of this move already. The symmetry of SPY has not missed one single time. I'm not going to go over the entire thing like I usually do. I just wanted to give a quick update on the price action right now and what I see going forward. But this looks amazing. 409 to 450 in 2 weeks, 2 days time. Holy fucking shit. What a run. Someone in the Discord was kind enough to run the math on this, and had you put $1,000 into 440 calls 3 weeks out on that 409 bottom, $1,000 investment would have netted you $500,000. You know, unfortunately, not many people played this, myself included. But yeah, this looks amazing. In the meantime, Michael Burry just closed a short position, a $1.6 billion short position at a 40% loss. Go figure, smart money. This looks great. We're in a full fucking bull market. No complaints whatsoever. Everything is ready to take off right now. There is potentially still some upside for SPY. Now, the actual symmetrical landmark here is 458, and it's actually a double top. And as I mentioned before, all of the landmarks on the right side of this, the symmetry, have been slightly lower. So the 460 was slightly lower. The cup and handle in the green was slightly lower. The yellow box right here, slightly lower. The 410 landmark, slightly lower. I'm expecting that trend to remain the same here for this top. Wherever we do top out, it's possible 450 was the top. I'm still leaning this more upside here. Potentially 455. I believe there's an open gap on the daily at 455 to the upside. So more upside to 455, a double top, and then a pretty nasty pullback to roughly 420 is what we're going to be looking for next. And this pullback to 420 is the final symmetrical landmark to the downside for SPY. So when this top finishes up, potentially this was the top, potentially there's a few more dollars of upside. We're still looking for a double top. So you're going to hit one top, pull back, double top it, and then you're going to get that knife to 420. That's what we're looking for going forward. So again, potentially more upside here to 455. Looking for a double top and then a pretty sharp knife to 420 more or less. Kind of in a tough spot here because I don't have the trend line here, but this was a descending broadening wedge here. And SPY actually broke out of it today, gapped up over it today. So retesting that wedge wouldn't really be bringing us down to 420, but potentially we wick through it slightly to check off that 420 landmark. But that is the final landmark for SPY. For the S&P 500 is 420 to the downside. From this landmark, when we get it, SPY will form another uptrend, and that uptrend will be taking it to all-time highs. And more likely than not, this will be synced up with the rest of the market, the meme basket included. Will be squeezing while SPY is making its push for all-time highs. So this looks great. Again, finish up the top here, potentially more upside to 455, double top, and then a pullback to 420, the final symmetrical landmark to the downside before the climb to all-time highs. This looks fucking amazing. What a 2-week run here. 409 to 450 in 2 weeks. Beautiful chart. Let's get into AMC, and we'll start with this. This is the macro from IPO on AMC. It's a log chart. I mentioned this in my video last time. All the levels here are the same. Was it as simple as that the entire time? I guess so. All the levels straight across are the same. So your January equivalent in white that you see here, your June equivalent that you see here, your V-shape, your macro break into the downtrend. So coming down to the green, up to the yellow, that's your highest peak in the downtrend. Same thing over here, coming down to the green, up, highest peak in the yellow, again down, and then up, lower peak, down, up, lower peak, down into the orange now, down into the orange, pretty much bouncing at the same exact level on both sides, by the way. This dotted line, pretty much the same level, bounces up to the same level, and then comes down to the blue line to establish support here before you curl up at the end and then knife into the flat portion, and that is where we are now. So I went over 2 possible scenarios in my last video. The first one being we would be coming down on the left leg of the final iteration here for our second bottom. And the other perspective would have been that we're still in this chop zone in the first segment here. I'm already ruling that out. It doesn't even make sense. 100% leaning we are coming down to our second bottom as we speak. If not, it's already in, and we're about to be getting into the tri-peak. So this looks great. No complaints here whatsoever. Another perspective, this is the same exact thing I just showed you, except this is not log anymore. This is standard regular chart with trend lines, the descending broadening wedge. So all the same markings, all the same levels, except now the wedge is here as well. So really we're just looking at the wedge from the previous cycle here versus the wedge of the current cycle here. So here's your macro break in the first macro break in the current, coming down to the support of the wedge on both sides, up to the top trend, that's your resistance. Reject that, come down again, back up to it, come down again, back up to it, reject it again, come down again, bounce up, come down again, bounce up, and then come all the way down to the blue line now. And that is your fourth and final touch on the wedge that you see here before you knife down into the flat portion, and you also get caught on that bottom support as you're seeing here. This red line is 0, and that is pretty much it. So there is actually a difference between this trend line of the previous macro and this trend line of the current. AMC is not what it is today, was not what it is today in the first macro. There was not as much volume, there was not as much retail interest in the stock, and while we were playing out the wedge here, there was no halts at the top resistance of this wedge. As compared to the current macro, every single time we've came anywhere near this, we've been halted. So halt here, this was a halt, and then the final halt in July, which took us down to the flat portion. So I want to zoom in on this now, because this is not going to play out like this, where you get the break out of this wedge and all this movement. This is not how this is going to play out over here. I'm going to show you why right now. So zooming into this, here is that same trend line, the resistance of the wedge, versus the current cycle on the right, the resistance of the wedge. The difference here is that the resistance of the current cycle, this wedge, this line, we have halted every single time we've come anywhere close to it, and the volatility behind this line is insane. And you could see that right here on the July after hours gap up. This was a straight line, 100% move in 1 minute. Straight line. That is the volatility that is sitting behind this trend line. Our squeeze is right behind this trend. So that's your macro halt. Here is that final bounce up in the orange that you see here, and then the fall down to the blue. It's all the same levels. All the same, 5865, 5865, 3407, 3407. It's the same exact fucking levels. Rejecting here, down to your flat portion. Rejecting here, down to your flat portion. We're playing it out, and again, we're not getting all of this movement outside the wedge. It's playing out right here. And the range is much tighter because this is the resistance. This trend, once broken, is going to look like a straight line to the fucking moon. Just like we saw in July, we got halted, again, to preserve the pattern, so we played it out properly, dropping down to the flat portion. There's your double peak move. There's your double peak move. This is where we are, the second bottom right here. This is where we are, looking for the tri-peak now, the third bottom, and then the squeeze. And I'm assuming, almost positive, the way this plays out is the tri-peak is going to look very similar to this. So, assuming the bottom is in here, we're going to get another double peak move, except it's going to be lower than this. So pretty much the same thing, just a little bit lower, kind of in the middle of the range. Another double peak here, and then we're going to come down one more time for our third bottom, all-time low. This will be a new all-time low for AMC. It's not going to be anything drastic. The current all-time low right now is $7.05. I'm expecting that to be somewhere in the range, ballpark, $6.70 to $7. That third bottom all-time low. From that is uptrend and a break of this trend and a straight line into the squeeze. And also, at the same time, we're meeting this trend. And again, the trend we're looking at is this trend right here, which we've been halted every time we've touched it. So we're running this straight down, halt, 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 running it straight down. We're meeting this trend, if I can get to it, on January 3rd, 2024, right at the New Year's. Deja vu. Right at the last macro, squeezing at New Year's 2021, meeting this trend line, the macro resistance, the halt line of AMC, right at the New Year. This looks amazing. So that's that. All right, now getting into the micro scenarios, and it's not, it is what it is. We're just waiting for landmark confirmation right now. Both of these scenarios, it's pretty much the same thing. We're in the same spot regardless. Where dropping down here, this would have been that choppy first segment, the first iteration, the W. Come up, double peak move, second one's higher. Come up, double peak move, second one's higher, and then knifing down. You do get this little cup on the side here, which I've talked about this cup multiple times, which rejects the bottom previous support of the double peak move, rejects that as resistance, and then knifes down to your second bottom. So it's possible that this wick here on the way down, the bounce up to it was actually that landmark, and this was actually the bottom here. And we'd be now looking to get into the tri-peak before the third bottom. So that would, again, what that would look like is another double peak move like this, except not as high, in the middle of the range, another one, and then coming down one final time for this third bottom all-time low landmark. Uptrend, break the trend, squeeze. So that's that perspective. Other scenario, it's pretty much the same shit, where this bottom actually would have been this bottom here, and we'd still be expecting to climb up to this trend, roughly $9, $8.90. One more time up to $8.90, and then knife down, and this would likely take us to $7.30. I'm leaning more this case right now. I think this is the more likely scenario right now, where the second bottom actually would be in, and we'd be in this little uptrend here. Not sure if we get the gap. It's possible we do. It's possible we just get, candles, boring ass, choppy uptrend candles like we saw previously, all of this. But I'm leaning this scenario for now. That's that. One more thing with the macro. So this again is the January 15th macro. So the first peak, the second peak, the downtrend, 4 touches on the top, the knife, and the V. Except we're looking at this on a macro scale now. So the first one from IPO, first peak, pullback, second peak, V shape, macro break into the downtrend. Current cycle, first peak, come down, second peak, V shape, macro break into the downtrend. So there's your first touch, there's your first touch, your second touch, your second touch, your third touch, your third, and then finally, right at the end, your fourth touch, like you see here, before you knife down to the flat portion, which is actually the V. This has become apparent now, and it honestly should have been apparent in the first place because of this chart on the left here. Your 4 touches, your knife into the V, the macro V, really is just the flat portion. We're playing it out right now. So again, your macro V into a new macro, which was the current macro, and then again, the same thing down to the flat portion. Again, the macro V is the flat portion. And again, just looking at it here, and if it helps, just look at the area under the candles, but here's your double peak move down to your second bottom, double peak move down to your second bottom, which is a higher low than the first. Then you have one more tri-peak, which is right in the middle of the range, which would take us probably $9 to mid $9 range, and then one more bottom slightly lower than the first one that we saw here into a squeeze and a new macro. This looks amazing. Pretty much just showing here the whole time the macro V, the January 15th end of day V, the macro V is really just the flat portion. So that's what we're looking at now. So that yellow horizontal line that I had running across the top here, I don't know if you remember that chart or not. I showed it multiple times, that yellow line running across. Really, that line is just the top of the flat portion. You could see it here in January, and you can now see it here in the current one, the current cycle. So that's that. Just as far as indicators go, this looks amazing. So still no complaints whatsoever, and I'm leaving a lot of shit out. So again, here's that same macro perspective I just showed you. This is just full screen now. So your two peaks break down to the downtrend, 4 touches on the top, 4 touches on the top, knife down to the flat portion, knife down to the flat portion. The flat portion really is just the macro V. You play that out, and then you squeeze into a new macro. Price targets have not changed. Price target's still $1,400. Volume profile looks amazing. Decreasing volume all the way through the macro, all the way until the flat portion, where it's picked up again and sitting at all-time high levels. OBV still at all-time highs on the weekly, and RSI still oversold on the weekly, sitting at 30 right now. Leaving out the Bollinger Bands, the Bollinger Band coincidence. I'm leaving out the Fibonacci spiral. Probably a couple other things, but that's irrelevant for the time being. And one final thing, GameStop's macro perspective. Here it is once again, and really quickly I'll cover this. So GameStop's macro begins, ends, however you want to call it, with an all-time low landmark. The first macro right here, into your macro break, your run, your squeeze, less volume here than the current, obviously. So your squeeze, your V-shape, your 1-2. And then over here, your all-time low landmark, your squeeze, your V-shape, can't even see it because it was instant, it's right here. Your V-shape, your 1-2, and then the downtrend. It's a very curved macro. You can see it here, very curved, and then again, very curved, curling down now, looking for the all-time low landmark. It's possible it's in, it's possible it's not, doesn't really fucking matter, because once the bottom is in, it's going to be a V recovery out of it into a straight line, into a squeeze. Everyone keeps asking me about my price targets for GameStop. Fib level wise, I like 3,000. It could go way higher, but for me, 3,000 is good. That's where I will be exiting my GME, and that is pretty much it for the video. And this squeeze is going to be instant. Just like the past macro, 2021 was a straight fucking line to the top for GameStop and AMC. Both of them just a straight line right to the top. This next macro we get is going to have even higher volume than the previous, and it's going to play out even faster. A straight fucking line to the moon. Again, coming up on the macro halt line, if we are just dead flat here at the bottom, January 3rd, if we're uptrending into it, that date will be sooner. And once we break this trend, that's it. If you've been paying attention to AMC for the past, 2 years, you've seen every time we've halted, whether you knew it or not, we were touching this trend. The volatility when we get those halts is fucking insane. That's what's waiting for us behind this trend. And we are very, very close to getting that. And before someone says, oh, what if we get halted and halted off the trend again? Well, if that happens, if we get halted off this trend again and we come lower, $0 is the price target. So that is pretty much it for the video. And no, I do not think we're going to $0 coming off the best earnings of all time. With everything fundamentally that AMC has going for it, Beyonce, T-Swift, popcorn, candy, sports, Publix, Kroger, you name it. The fucking writers are finally off strike, I think. Bunch of pussies, I don't even know. But yeah, fundamentally, AMC is not going anywhere. And with that being said, we're not going to 0. And with that being said, we will be breaking this trend to the upside. Price target, $1,400. That's pretty much it for the video. I'll catch you guys with some more updates potentially this week. I don't know, depends on price action. If not, maybe a Friday recap, a weekly recap video on Friday, and then we'll see how next week goes. That being said, take care, have a good night, catch you in the next one.